Now, next, we will be studying the preparation of accounting vouchers. Now, what is the meaning of preparation of accounting vouchers? How are the vouchers prepared? Obviously, we are simply here to record the transactions. Before that, we have to do some of the activities so that the recording of transactions can be smooth, because the transactions are recorded with the source document. If there is no source document, we will not be able to record the transactions. So what are the source documents? Source documents are basically the vouchers. So now let's see how the vouchers are prepared. So accounting vouchers are classified as cash vouchers. There are different type of vouchers. Whenever we do the transactions, obviously, as I have told you already, that if we are selling the goods, when the goods are sold to the ultimate customers, there can be two scenarios. The first one is we might get the cash immediately. Obviously, we just sold the goods and we received the cash immediately. The second scenario can be we have sold the goods, but we haven't received the cash immediately. That is, we have sold the goods on credit. That is, we will receive the cash after a period of time. At present, we are not able to receive the cash, but in the future, obviously, since the goods have been delivered, we will receive the cash for sure. So there are different types of transactions which involve different types of events. So for the different type of transactions, we have different type of vouchers which have been prepared. Like for example, we have a cash voucher. Now, what is a cash voucher? Cash voucher is only presented, only made when the transactions are done on cash basis, when the goods are sold on the cash basis, or else when the goods are being purchased on cash basis. So the purchasing of goods also involves two of the items. It can involve two aspects. One, we can purchase the goods on cash basis. The other one is we can also purchase the goods on credit basis. So cash basis, we have to simply pay the cash immediately. Next, in the credit basis, we won't pay the cash immediately, but after a period of time, after a month or so, after 10-15 days, as per the agreements between the seller and the buyer, the amount will be paid off. Okay, so if the amount is paid and if the amount is being received immediately, so the cash vouchers are prepared, wherein we write down that this is the actual amount of cash which we have received, or this is the actual amount of cash which we have paid on purchasing or selling of the goods. So this was the meaning of cash vouchers. Next is the debit voucher. Debit voucher and credit voucher. These are basically when the goods are sold and when goods are purchased, when the amount is not paid. What happens when a person is to be paid an amount? That is, if we have purchased goods from a person, so he is our creditor. Now, why is he our creditor? Because he actually needs the amount from us, because we have purchased the goods from him, so he needs the amount. So when we purchase the goods, suppose our business, this is our business and this is our business. We are purchasing the goods from the suppliers. Okay, we are purchasing the goods from the suppliers, and ultimately we sell these goods to the ultimate customers, that is the ultimate consumers. Now what happens when we buy the goods from the suppliers? That is, supplier is delivering the goods to us. So if we are paying the cash to him, so there is no confusion, because we purchase the goods and the cash has been paid. But if at all the cash is not paid, it isn't like that we won't pay the cash, we will pay the cash after a period of time. So if we are at all not paying the cash immediately, this supplier this supplier will be known as our creditor. Now, why will be known as the creditor? Because he is our liability from whom we have purchased the goods, and we as a business are liable to pay him the amount. So supplier will become our liability. That is, we will have to pay him the amount which we have bought the goods for. So we are liable to pay him as he is our liability. Is that clear? Next, next. Now, these goods again will be sold to the customers. Now, if the goods are sold to the customers and the customer is paying immediately the cash to us, then there is no confusion because we have received the cash, we have sold the goods. But if at all it happens that the customer is unable to pay the cash at the moment, so we will ask the cash to be paid after a period or so. So this time, this person will become our debtor. Now, since he is our debtor, he is our asset. Why? Because after a month or so, after a period of time, we will gain an amount from him. We will receive an amount from him. That's why he is our asset. Is that okay? So while at the time of purchasing or selling the goods on credit, okay, so at that time only we have to prepare a debit voucher and a credit voucher depending upon the transaction of sales or purchases. Okay. Next is the journal vouchers. Now, what are the journal vouchers? Where there is no purchase of goods, no sale of goods, no cash involved, but the goods, no, where the goods is not involved, nor the cash is involved. For example, if there is a person who has worked for me and I don't have the amount to pay him, so I will make a journal voucher that for sure I will pay you the amount. Or else, when I charge a depreciation on machinery, for this I make a journal voucher. So these are the vouchers which do not involve any of the transaction relating to cash or the goods. So all the transactions which do not involve these items are presented in the journal vouchers. Okay. Next. So there is no set format for accounting vouchers. There is no set format for accounting vouchers. Just imagine if you are purchasing the goods, okay, or else if you are selling the goods, what all information you will record. If you have received the cash, you will just record the amount you have recorded, the amount you have received by selling the goods, the date on which the goods were sold, and the quantity of the amount which have been sold, so that you can have the information that these all goods were delivered to him. Now in the stock, this type of goods would have been reduced. Okay, so this is the basic information which is recorded in the vouchers. So as such, there is no format, a general theme that these 2, 3, 4 items should be there in that particular voucher. Apart from that, if we are purchasing or selling the goods on credit, so we must know the name of that person, because with that we will be able to get to whom we have to pay, or else from whom we want the amount for the goods we have sold on credit. Is that okay? So that's why we should know each and every person's name and the amount associated with that transaction also. The amount is the major part. Amount will always come because we have to record the monetary transactions. We are recording the transactions which is involving money. So we should know the name of this supplier to whom we have to pay the amount, and we should also know the name of the customer from whom we want the money back. Only when the goods are sold or purchased on credit. Okay. Next. So specimen simple transaction voucher practice. Okay. This is a specimen that a simple transaction voucher, how is it prepared, which involves only 4 to 5 items which are to be recorded in that particular voucher. The specimen is given. Okay, I will just let you know the specimen as well. Next, this is preserved case till audit accounts and tax assessments relevant period completed. Okay, this simply says that these all source documents are to be kept within the file, with a place in the office till the time it has been audited by the chartered accountant. What does that mean? Just let me tell you an example. For example, what's happening is these are the vouchers. With the vouchers only, an accountant records these transactions in the form of journal entries. He, after looking at all the vouchers, then only he is able to record the transactions. So basically, vouchers are the source document. Why are these a source document? Because because with this only because with this only the journal entries are made. Okay, so suppose an accountant is recording for the full year, for all the 365 days, all the transactions have been recorded by the accountant in the journal entries. Obviously, he is a human and errors are very much possible because humans are only the person who do the errors, obviously. So since there can be many of the errors, now what will happen at the end of the year, there is an auditor, a chartered accountant, which comes to the office, which verifies each and everything. Now, how does it verify? Because he doesn't have so much of time to look for all the transactions which were there in the 365 days. So what does he do? He checks the transaction on a hit and trial basis. He will ask for the month of April, just give me 5th April transaction, just give me the documents, just give me the source documents for 5th April. Again, he will say, just give me the documents for 18th April. Then he will match the transactions which are being recorded by the accountant with that source document, whether the source document and the transactions are true or not, are similar, are same or not. Is that clear? So he will randomly check each and every transaction. Okay, so by sampling method, suppose in the month of May he will ask for 1st May, he can ask for 10th May, he can ask for 19th May, any period time, any day he can ask for, and he will just verify whether these transactions have been recorded correctly or not, whether there is a fraud going on or not. Okay, so with that, so it has been written, these documents are preserved till the audit of accounts is complete, till the auditor verifies that yes, the accounting information which has been prepared by the accountant is correct. Then only these source document can be discarded, then only this source document can be thrown off. Is that clear? Till that time, the source document will be present, should be present there. So it has been written, it should be preserved till the audit of the accounts and tax assessment, till the date the taxes have been paid. Because what happens if the taxes are not paid, then also there can be a possibility that there might be a problem in the recording of the transaction. We are not saying that accountant has deliberately done that. He might have done the error. Suppose, for example, accountant has to note down a amount of 5,000, which he wrote it down as 50,000. So this is a mistake. This can be happen with anyone, not only the accountant. Each and everyone can do the mistake of adding extra zeros or doing less zeros. For example, in the source document, this this has been written. This is 700. Now, this is the writing of one person who writes 7 like this. But actually, it looks like he has written how much? 100 rupees. So an accountant will record how much? 100 rupees. So there can be a mistake. So these all items are checked and verified by the chartered accountant, the auditors. Okay. So till the date it has been, till the date the audit has not been completed, till the date the tax assessments have not been completed for that particular period, till that time the source document should be present there, should be, kept very safely so that each and everything can be verified easily. Next, accounting is computerized and accounting vouchers showing code. Now what happens? The accounting is done on the computer, but the vouchers were made handwritten. So when the handwritten vouchers were made, so there was a serial number. Every voucher has a particular serial number which has to be written in the computerized system, that this transaction has been taken from the voucher number 1, from the voucher number 2, which was done on 5th April, which was done on 10th April. Likewise, so it has been written that the accounting is computerized and accounting vouchers showing code. Every voucher has a code that is basically the serial numbers and the dates. Okay, so this type of recording is done with the help of the source document, because those are the main documents, main evidence with which we can record the transactions. Now we'll see the pro forma or the specimen for the vouchers. So basically, this is a voucher. Now, suppose this is a credit voucher. Now, credit voucher, we have to write the name of the firm. Obviously, I am the business owner of XYZ Traders. So, the first thing which a source document will have is the name of the company, that is name of our company. Okay. And second one is the date. Next, voucher number. As I told you, every voucher should have a unique number, because if there is no serial number, then there can be a havoc situation. Suppose I have given a voucher number 1 to someone and the voucher number 1 to other person as well. So what will happen? I will only record voucher number 1 as one part. Okay. But I have paid the same voucher with the same voucher number 2 times. So it won't be recorded. That's why this should not be the scenario, that all the vouchers should have a unique number. Next, I will write the debit account, to whom, from whom I want the amount, to whom I owe the amount. This will be written, that is the name of that person. And apart from the name of that person, we will also write the amount. As I told you, the amount is the major part, major concern in the vouchers. Okay, because all the monetary transactions are only recorded in the books of accounts. Next, we will write the serial number, code, account name, amount, narration. Each and everything will be written with the information, that is serial number, what are the items, what are the code of the items which we have sold, and the account name, what are the item descriptions, and the amount, and will be the total amount as a whole will be written in the top. Okay, this was the pro forma. Now, prepared by, as I told you, yes, accountants prepare this. Yes, accountants prepare this, and this is given to the senior accountant to record the transactions. So he will just put a sign of him who has prepared. After the, these vouchers have been prepared, these go to the higher authority officer. He checks whether the amount, whether the goods have been sold are correct or not. Are the serial number and the date and the amount mentioned is the total of these amounts, and are the goods which were written down there are of appropriate nature, are of correct nature or not. Then only he will authorize, yes, I have authorized, the voucher is correct and true to its nature. So this is how a voucher is prepared. Okay. Next, this was the preparation of accounting vouchers. Next, now we will see again the same thing, that is it should have a number. As we also just saw, that it should have a number, it should have a name, accounts debited, name of the account which has to be debited, and the name which has to be credited. This we will be studying in the future classes, that what needs to get debited and what needs to get credited. You just need to just learn at the moment that a voucher is prepared. When is it prepared? When the transaction takes place. The transactions can be in a cash nature or a credit nature. If it is a cash nature, cash voucher is prepared. If it is of a credit nature, we are purchasing the goods on credit, we are selling the goods on credit. Debit voucher and credit vouchers are prepared simultaneously. Is that clear? Next. So, number, serial number, name of the accounts to be debited, name of the account to be credited are prepared purpose of necessary recording of transactions. Obviously, for every transaction, we need to have a voucher so that the recording of transaction can be much more easy. Okay, if we don't have the vouchers, we just can't imagine, we just can't imagine the amounts and write down. We should have the evidence, the proper evidence for that as well. Now, next. So a transaction always has a one debit and a one credit. As we all know, the transaction simply means the give and take. Since the transaction involves two of the aspects, so every transaction will have two of the aspects. That is, one will be the debit and the other one will be the credit. So what all items need to be debited and what all items need to be credited, we will see in the future classes. But every transaction will have give and take, and accounting is totally dependent upon the debit and credit only. So in the future classes, you will be hearing this many times. This has to be debited, this has to be credited, because this is the main thing, main purpose, main items in the accounts. What is need to be debited and what is need to be credited. Let me just give you a glimpse, just a small example. For example, when we purchase the goods, we have to simply do debit what comes in. I'm just telling you the example. In future, we will be studying it in deep, but let me just explain you. Debit The first rule says debit what comes in. Everything which is coming to us needs to be debited. As simple as that. And everything which is going out from us needs to get credited. So debit what comes in, credit what goes out. As simple as that. Is that clear? So we have to debit the incoming item and we have to credit the outgoing item. Okay. Next. Now, for example, if we are purchasing a machinery, okay, if we are purchasing a machinery, just imagine what will happen. If we are purchasing a machinery, the machinery is coming in. Since the machinery is coming in, so it will be debited. So it will be debited. And when we have to purchase a machinery, the cash will be going out. Since the cash is going out, we will have to credit that amount. This is just an example which says debit what comes in, credit what goes out. So whenever we take something, that has to be debited. Whenever we give something, that has to be credited. So likewise, which all accounts have to be debited, which all accounts have to be credited. That is, account simply means the items. That is, if we are purchasing machinery, when it is to be debited, when is it to be credited. For example, when we are giving cash or we are getting cash, when it is to be debited, when it is to be credited, these all are to be written in that particular voucher so that there is a easiness in the transaction to be recorded. Next, so every transaction will have a debit and credit because every time we will be getting something in order to give something. Okay, so every time there will be a debit and a credit as well. So transaction has a one debit and one credit. In the simple transaction, and accounting vouchers are prepared as per these transactions only. So every time in the voucher, you simply write which account is to be debited. If it is written in the voucher, the debit account, so we will write machinery. And if there is a credit account in the voucher, we will write cash. Okay, simple. So debit account is machinery because machinery is coming in, it has to be debited. Cash is going out, it has to be credited. In a voucher, these two things should be mentioned. As simple as that. Okay, next. So transaction vouchers format records transaction entails multiple debits and credits, and one credit and debit is called compound voucher. Now, what happens? Suppose if this much is very much clear to you, let me just erase it. So suppose there is a person, say there's a person whose name is Akash. Now, Akash has an electronic showroom. Okay. Akash runs the electronic showroom. Now, we in the business needs some of the items from the electronic showroom. Suppose we need to have an air conditioner in our office. So we will have an air conditioner in our office. We will have to buy the tube lights. We will have to buy the fans. So suppose these are the three items which we need in our office. So we simply go to Akash, the electronic showroom. We ask him to please give us these three items. Okay. Now just imagine what is coming in. This time, not only one item, the machinery, earlier machinery was coming in, cash was going out. Okay. This time I am receiving three items. That is, three items are coming to me. First one is the air conditioner. Second is the tube light. Third is the fan. All the three items are coming from Akash's electronic showroom only. So if these items are coming from Akash electronic showroom, so I will have to debit all the three items. As I just told you, the first rule, there are three main rules, of which I have explained you one rule. Now what's happening is these all three have to be debited. Why? Because these three items are coming to me for which I will be paying the cash. So cash is going out, these three items are coming in. So when I will write the debit account, in this I will write all the three items. That is, I have purchased the air conditioner, I have purchased the tube light, and I have purchased the fans as well. So all these three will be of debit nature, and credit account credit account will be simply one, that is the cash, because I paid him the cash and I received all the three items. That has been written here that if there are multiple debits and multiple credits, we just saw there are three items which are being debited and one item being credited. Likewise, just imagine the scenario of Mr. Akash, electronic showroom, who runs the electronic showroom. He's selling these items. So he will debit cash because he is receiving the cash. The cash is coming to him and the three items are going away. So he will credit the three items and debit one item. As the buyer, we have to debit three items and credit one item. Okay. So it can be multiple debits or multiple credits if in the single transaction there are more than one debit credit, more than one debit or more than one credit, then these are to be recorded in the compound vouchers. These are known as the compound entries, where there is more than one account involved. Okay. So simple, if we are doing the simple cash transactions, cash is coming in, cash is going out, cash vouchers. Goods are being sold on credit or goods are being purchased on credit, debit voucher, credit voucher. Next, if the goods, if the transactions are done where it involves multiple items which is coming in and multiple items which is going out, then we have to make a compound voucher. Okay. Next, so compound vouchers may be a debit voucher and a credit voucher. Okay, debit voucher as in what items need to be debited, and credit vouchers what items need to be credited in that particular voucher. So this is the same format which was there in the last one. In the last slide we saw this was a credit voucher. Now this time we have a debit voucher in the specimen. Now let me just explain you the debit voucher as well. So this is the debit voucher, which again there it has been written. There is a debit voucher, the name of the voucher, the name of the firm, date, voucher number, credit account. Earlier it had written debit account because it was a credit voucher. Now this time it is just the opposite. Whichever voucher it is, suppose it's a debit voucher, the credit account should be mentioned. Okay. So now since this is a debit voucher, we will have to write the credit account, the account which has to be credited. The amount and everything rest remains the same. Just the simple one difference. If it is a debit voucher, we have to write credit account. If it is a credit voucher, we have to write the debit account. Okay. This was the simple vouchers, two types of vouchers, debit and the credit. Next, as we just saw, transactions with the multiple debits and multiple credits are known as the complex transactions, for which the complex transaction accounting vouchers is prepared. The compound vouchers are to be prepared, in which there will be more than one credit and more than one debit. Now, just see this. Okay, here you can see the debit accounts and the credit accounts. Are you able to see? This is a one voucher where there are multiple items involved. So we will have to write the debit accounts and the credit accounts as well. Earlier there was only one, but with the multiple items, we will have this type of format where we will have to have both of the items. These are basically known as the journal vouchers. The journal vouchers will be written in the top with the company's name. Apart from that, the voucher number, date, and the debit accounts. With these, you will have to write the debit accounts and the credit accounts as well. So this was the format for your journal voucher. Okay. Next, next, it says these are prepared transaction complex vouchers or journal vouchers. These where there are more than one transactions, where there are more than one debit and credit, it is to be recorded in the complex voucher. It is known as complex vouchers, or else it is known as the journal voucher, as we just saw. Okay, the format of the complex transaction voucher is this one, and design accounting vouchers depends upon the nature, requirement, and convenience of the business. Obviously, it totally depends upon the business, what all information they have to record. So as such, there is no specific format, but a general format is there where the basic items need to be there for the transaction which have to be recorded. Okay. Next, Next is the, now we will be distinguishing between various vouchers. Different color papers and different fonts of printing are used. Now what happens? All the vouchers are, almost similar. As we just saw, debit voucher, there was a difference of debit and credit and debit, only just a simple difference. So what happens whenever a company has to, make the vouchers, when they purchase a voucher book in which everything has to be recorded as a source document, what they do is they ask the printer, that is the person from whom these are being purchased, they ask from that person to just do one thing, just color the debit voucher with yellow. Then let's suppose this is a debit voucher. This is a debit voucher which will be of which color? Which will be of yellow color. Suppose they again say just print a credit voucher of orange color. So with this, there is a bifurcation in the different types of vouchers. Okay, with this only we can differentiate between the different types of vouchers. On the top, obviously it will be written debit voucher, and also the color will be also mentioned, so that there cannot be any confusion. Okay. Next, so accounting vouchers must contain the following essential item. Now, what are the essential items which have to be there in the vouchers? We have already seen the date, serial number, voucher number, and the debit account, credit amount, and the amount. So these are all the items. We'll see it. Written good quality paper. The first thing should be the quality of the paper should be very much good. Now the question arises, why is this written? Obviously, we will keep the good quality only. Okay, what happens if you don't keep the quality of the vouchers good, appropriate? Then what will happen? These vouchers are to be kept for approximately a year or 2 or 3 as well. So if we have purchased a low quality voucher, low quality paper is used, then the items which have been written, everything which has been written may get erased or may get vanished. That's why the proper quality should be maintained for the papers on which the source document is to be recorded, because these are the source documents. If these documents, if at all, I'm not saying every time, if at all these documents get eroded, if these documents gets discarded, something happens to these documents, then the government may think that we are doing frauds. So the quality of the paper should be of a good quality. Okay. Next, apart from that, the name of the firm must be printed on the top. Exactly, the name of the business firm. We always saw that the business firm's name is always there on the top. If the business firm's name is not on the top, then we just can't say this is of our business. The name should be there in the top of that particular voucher. Okay. Next, the date of transaction is filled up. Obviously, the date, as we all know, these vouchers are to be done, maintained, recorded on a chronological order. So these have to be maintained on a proper date wise. Okay, and the date should be given, should be there in the vouchers. Without the date, these are considered fake. Okay, So that simply means you are trying to do the frauds. So this should not be the scenario. Next, apart from that, the date of transaction is filled up against the date and not the date of recording of transaction is to be mentioned. Yes, this is very much important. The question may arise. So which date is to be written? What happens? Suppose this is a voucher. Suppose this is a voucher. This voucher, suppose, got prepared on 5th of April. This voucher got prepared on 5th of April. Okay. From this voucher, the accounting transactions are to be recorded. Suppose the transaction got recorded in the form of journal entries on 10th of April. A question arises on which date. So voucher should have which date? 5th April or 10th April? Obviously, it should have 5th April, the day the voucher got prepared, and not the date when the transaction was recorded in the books of accounts. This should be kept in mind. This has been written here. Okay. Next, the number of the voucher serial order. Obviously, apart from the date, the firm's name, there should also be the number of voucher, that is the serial number should be in order. That is 1, 2, 3, 4. It should not be like 1, 5, 3, 4, 6, 8, 10, 15. Not like that. It should be properly serialed and proper number should be mentioned in the format in the voucher. Next is the name of the account to be debited or the credited is mentioned. These all are also to be mentioned, that all the name of the account, as we all know that every transaction has two aspects, the give and take. So every transaction will have one of the debit and one of the credit item as well. So which items need to be debited, which items need to be credited should also be mentioned in that voucher, as we just saw in the previous slides. Okay. Next, the debit and credit amount is to be written in figures against the amount. Now what happens? Suppose the goods have been sold for rupees 5,000. If the goods have been sold for rupees 5,000, in figures also you will have to write the amount, that is 5,000 rupees. Okay. Now the question arises, why is this to be taken into consideration? Why do we have to record the amount twice? One in numerical, one in the written words. Why? Because sometimes the handwriting of one person is not very much clear. So he can simply read this to check whether the amount are matching or not, whether the person is able to understand the figures or not. That's why the debit and credit amounts, obviously both the amounts, the debit and the credit amount should be there, and both of them should be equal. It should not be like this is a 5,000 and this is of 2,000. Every time, obviously, when you go to buy a chocolate, say suppose chocolate, whenever you buy a chocolate for rupees 50, what is the amount you will give to him? Obviously, you will pay him 50 rupees only. Why will you pay him 50 rupees? Because that chocolate you are getting is for rupees 50. So the amount you will pay will also be 50. So that's why these two should be of the same amount. This should not differ. So this should not be 2,000. This should always be equal to the credit and the debit amount. Is that clear? For example, and why is this being written here? What happens when we do the multiple items, when multiple items are being purchased? For example, we are purchasing machinery from the same shop from whom we have been purchasing the furniture. So two items we are purchasing. We are purchasing machinery worth of 5 lakhs, and from the same shop we have purchased the furniture worth of 2 lakhs. So what is the ultimate amount? So the ultimate amount of debit is how much? It is 7 lakhs, and the cash is going out of how much? 7 lakhs only. So the credit amount will be of how much? 7 lakhs only. So every time the debit amount and the credit amount should be equal. See, debit 7 lakhs, credit 7 lakhs. Even though there are two items which have been purchased, then also the sum total will be equal to the debit and the credit. Is that clear? Next, description of the transaction is to be given account wise. As to description, what type of machinery is being purchased and how many quantities of machinery have been purchased for rupees 5 lakhs. What type of furniture and quantity have been purchased for rupees 2 lakhs. Every description has also to be given in the voucher itself, so that there can be two things possible. One, to record the transaction. Other, to see that we had machinery of, say, suppose 50 lakhs. Since we have sold machinery of 5 lakhs, so the remaining is of 45 lakhs. We will check whether in reality we have a machinery worth of 45 lakhs or not. So this is how these transactions are recorded. This is how these vouchers are prepared. Okay. Next, the person who prepares the voucher must mention his name along with signature. As we just saw that the voucher, in this, the voucher, it is written prepared by. It has been written prepared by. So the person who is preparing this voucher has to mention his name, and has to do the sign as well, so that in future if there is any dispute, we can take hold of that person and then we will ask him, just tell us, this has been prepared by you, why is this wrong, what is the amount of fraud as you have done. Okay. So the person who is preparing the voucher should mention his name and should also sign that particular voucher. Next, the name and signature authorized person are mentioned on the voucher. The authorized person's signatory is also be there. As just let me once again show you. This was the by whom it has been prepared. Now here we have written the authorized by. The person who is authorizing, yes, this voucher is correct. So again, if there is any problem, we will take hold of these both person and we'll ask, what is the scenario? Tell us the truth. What are you hiding from us? So this is how the evidence and the vouchers are to be prepared. Okay. So this was basically the preparation of accounting vouchers. This is how the accounting vouchers are prepared. These were the contents of the accounting vouchers, because these are the source documents. So these are to be prepared very cautiously. From this only the transactions begin. Okay. I hope this full topic was very much clear to you. Thank you so much for watching.